Mehak Kamboj. And I'm Srishti Rawat. We'll be talking about the Japanese economy in the past few decades and their current monetary policy.
After the World War, many of the gains that Japan had made since 1868 were wiped out. Therefore, post war, as Japan's second period of economic development began, new factories were set up. Their main motive was to build up their industries. Therefore, major investments were made in electric power, coal, steel, and chemicals. By the mid 1950s, their production matched pre war levels, and the economy not only recovered its lost momentum, but it also surpassed growth rates of their earlier periods. But again, in the mid 1970s, Japan's economy faced its post war decline as a result of the 1973 oil crisis. It was seen in the late 1970s and 1980s that Japan attained annual growth rates at only 4 to 6%, which were actually remarkable in the world of expensive petroleum, and also Japan being a nation of very few natural resources. This was basically due to advances in semiconductors and microcircuitry, which led to new growth industries in consumer electronics and computers, for example. Again, back in the late 1980s, Japan's economy was back on track. Japan encouraged its people to save their income, and with more money in the banks, the loans and the advances became easier to obtain. Side by side, yen appreciated against foreign currencies. With so much money readily available for investment, speculation was inevitable, particularly in the Tokyo Stock Exchange and in the real estate markets. The rates for then housing and stocks and bonds rose. But after such an high economic boom, Japan again entered a recessionary phase, and trillions were wiped out with the combined collapse of the Tokyo Stock Exchange and the real estate markets.
So, as we can see from our timeline, that from 1991 to 2000 was the time period when the Japanese economy entered a recessionary phase. So, what exactly caused all this? Let's understand this in a simple manner. The time between 1991 to 2000, commonly known as the lost 10 years, refers to the time after the Japanese asset price bubble collapsed. So, this lost decade is an example of a liquidity trap. And even the decade from 2001 and 2010 is included in the whole period, and this whole period is referred to as the lost score or the lost 20 years. So basically, there are many factors which led to the fall in the Japanese economy. After a decade of a long and steady fast-paced economic boom, there was a sudden creation of a massive asset price bubble in the Japanese economy. This was basically because as we saw in the previous decade, the banks in the Japanese economy started lending a lot, which slowly and steadily led to a creation of a bubble. So, the banks were lending to people with less regard for the quality of the borrower, and when the loans went unpaid, they did not even bother to collect dues from the collateral. They were hoping that the asset prices would improve over time, but due to the deflationary force in the economy, the banks slowly and very slowly started becoming insolvent. The banks became insolvent, And plus, as we know that Japanese economy has the highest proportion of elderly population in their country. So this basically leads to a very high personal saving rates being existent there. So what did all this basically led to was that the banks were slowly becoming insolvent, plus the consumption was not much in the economy. So this created a very stagnant kind of a situation there. The consumption was down, the production was down, which slowly led to a fall in the economic growth of the economy. To correct this, in 1989, the Bank of Japan raised the interbank lending rates. They thought that they could keep inflation in check because of these measures. But this sharp and sudden policy of theirs instead caused the bursting of the bubble, and the Japanese stock market finally crashed. The equity and the asset prices fell, and banks and the insurance companies became full of their books became full of bad debts. So, to correct all this, the government then infused capital into the banks. But what the banks did were they in turn kept injecting these funds into the zombie firms. So, zombie firms were basically who were like on the edge of closing down, like they were almost shut down because the production levels were very low because of the consumption levels being very low in the economy. So the banks in turn kept injecting the funds into these firms, hoping that they were, too big to fail. But these companies were almost too much ridden that they could not even survive on those bailout funds. So all this led to a major chaos in the economy, and there was a major decrease in the consumption level of the economy. The Japanese firms became insolvent, and despite the interest rates being cut down to almost zero levels, the firms became overall net savers as opposed to borrowers, because since there was no consumption and they were so much debt ridden that they did not want any further loans or sanctions. So what they ultimately did was even they became net savers like the rest of the people in the economy. And as these firms became net savers, their production levels went down, their profits level went down. So what they did was they in turn reduced their workforce and replaced their workforce with the temporary workers. So all this, all this led to the fall in the wages in the economy, and there was a total complete fall in the output per capita of the economy. So this is like the basic rule in economics, or as we can see in the examples of the economies all over the globe, that as consumption in the economy goes down, the production goes down. If the production goes down, the firms and the companies are not producing, so their workforce levels go down. The people slowly start becoming unemployed. So this leads to a major downturn in the economy, and the wages fall. There's decrease in the output per capita. So this is what basically happened in Japan at that point of time. the Japan being a country with very low population rates, and wherein the population has a very large component of the elderly people, the people slowly became savers, and after the sudden recessionary phase in their economy, where the market and the economy crashed, they even further became more averse to consumption, and they started saving more. The firms became net savers. So this led to a big slowdown in their economy. And as we can see that even till today, Japan is still feeling the effects of the lost decade.
Now I'll be talking about the monetary policy of Japan. From 29 January 2016, the Bank of Japan pushed its interest rates below zero. Further, the bank divided the current account balances that financial institutions keep at the Bank of Japan into three tiers. The existing balances will continue to have a rate of 0.1%, which will be called the basic balance. A rate of 0% will also be applied to the reserves that institutions are required to keep at the Bank of Japan, and also the reserves related to banks' various lending support programs. This is called the macro add-on balance. A rate of minus 0.1% will be applied to any reserves which are not included in the first two tiers. This is called the policy rate balance. Also, as per the monetary policy meeting on 29 July 2016, the bank decided that it will purchase ETFs so that their amount outstanding will increase at an annual pace of about 6 trillion yen. The bank will also increase its lending program to support to support growth in US dollars to 25 billion USD. The bank will further establish a new facility in which it lends Japanese government securities to financial institutions against their current account balances with the bank, so that these Japanese government securities can be pledged as collateral for the US dollar funds supplying operations. The bank will continue its qualitative and quantitative easing with a negative interest rate, aiming to achieve the price stability of 2% for as long as it is necessary. Also, helicopter money, which was to be considered by Bank of Japan, is being abolished.
Now we can conclude from all of this is that the only hope left for Japan is that the other countries should grow, because the growth levels in Japan have reached a saturation level.
So now they can only sustain by investing in other countries, like which they have been doing for the past few years through the route of FDIs, etc. Like in the case of India, China, US, etc.
Thank you.